Hey folks, and welcome to the Pipnotic Symposium for the 16th of December 2019. Today we're going to have a look at some trades that the robot has taken over the course of about a year and a half. Overall, the robot is very profitable, but I like to go through on a regular basis and analyze some of the trades, especially the losers, because these are the ones that are really telling me what mistakes the robot is making and essentially what kind of assumptions or invalid assumptions I have about what the robot should be doing. So this is just a really nice way for me to kind of validate the process and validate some theories that I have in my head as to how this market moves. Okay, I'm just going to show the results for the robot. Okay, so this is a sample size of about 800 trades, as you can see here, and we have a really nice equity curve that moves up nicely like this. I've had a few kind of losses here in a row. That's normal, that's fine. And we have a kind of a flat period here, and that's also fine. But overall we have some pretty nice growth, and I think we can be very pleased about the results here. Okay, so let's have a look at some of these trades. And so my general theory behind it all is that the losers are a result of trades that are not taken at daily, weekly, or monthly supply or demand. And more specifically, if you're looking at, for example, the 1 hour chart, sometimes if the robot is told to trade on the 1 hour chart, it'll sometimes buy into daily or weekly or monthly supply, which will essentially not work out very well because the major flows are going to be moving with the higher time frame supply and demand. And so not paying attention to the macro view is definitely going to cause the robot to bleed. And also we have this one here, and this is the trades that are taken in the middle. So you have price that is moving higher. If I just draw that, so we have a price point, like a low, then a high, and then a low. So trades that are taken kind of in the middle. Okay, these are lower probability trades and they're higher risk because the probability of the trades taken in the middle working out are much lower. So essentially, as with all things we want to buy and sell, is we want to be selling when the prices are high, we want to be buying when prices are low. Okay, this is I think the number one takeaway that we can have in relation to trading. And these are just two very important points that I have that I see over and over and over again when I focus on the trades that are lost by the robot. Okay, so if we have a look at some of these. Okay, if we have a look at this trade here. Okay, so this trade here, this was a daily trade, and it was taken just here. You can see the line, so the little box in. You can see why it took the trade. We had this area of daily demand. Price went up. We tested it a couple of times, and then we just tore through it. The reason this is a less probable trade is because if you go to the monthly chart and you look here, you can see, as a matter of fact, price had just entered monthly supply. Okay, so buying anywhere close to this, especially once this has happened, is just a really bad idea. As a result, the trade lost. Okay, let's have a look at this one. This is a small winning trade. Okay, macro view, should we be buying or selling? We should definitely be buying, and you can see this because we're getting to the beginning of the buy and the sell zone. So if we have a look at this, we'll mark this off here. Okay, price just poked into monthly demand. Should we be buying or selling? We should definitely be buying. We shouldn't be selling. The robot sold, and the reason this one worked out is pure luck, as a matter of fact. Okay, so this is just a really bad idea. Okay, but price did that, and we managed to get out of that one without losing the skin on our nose. If we have a look at this one here, and the reason, if we look at this, notice that we're very low in price. We don't have any more historical data. We do have the beginning of the buy zone is here, so we just poked into this one here, and now price started to move up. So when we were positioned long, but there was probably something that was in the way. Yes, here we have it right here. So we have this area of supply. Price just poked into it, so we can expect price to move lower. And the robot bought here just after price poked into weekly supply, which is generally a pretty bad idea. And if we look here, we have this little price structure here. Okay, price went up, we came down, we went up to opposing side, and now we can expect price to come back down to here again because there's nothing in the middle. And again here, this is, if we go back to the point here about trades taken in the middle of moves, in this little price structure here, this is a move, okay, and this is a move here. A little bit difficult to position. Okay, so price went down, boom, so we have supply. Price went up, boom, we have demand. Okay, and so messing around in the middle here is just generally not a good idea. We want to be selling high and buying low. Okay, so this is just another reason that one didn't work out. We have a look at this one here. Let me remove these lines for us. We look here, we have this one sold just here. Area of supply tested once, twice. So price tested this, and then we formed this little area of supply here. Price came up, went down, we came up a little bit deeper, and this is where the robot sold. And this is, you see the D1 here, that's telling us it's a daily trade. So if we look at that, you can see why the robot traded. It looked at that. It's not a beautiful area of supply, but it's just, it was enough for price to have a bit of a bounce. Our stop was here, and our target was down here, which was eventually reached, but after our stop would have been hit, which is why the robot took this off a little bit early. Okay, let's have a look at another one. Got this one here. This is a buy. The robot bought this area of daily demand, poked in here, and took it off here. And price just continued wriggling higher. Now price is continuing to move high here. That's a really nice trade, that one. It didn't get the whole move, but it's the logic behind the decision making is good, which I like. We look at this one here. We have another small winner. This is a buy. We were buying just here, off of this, just here. So price poked into here, had a bounce, went a little bit through it. You can see it went to the bottom, and then we moved to the opposing side of the market, which is this area of daily supply. It's a nice trade. You got this one here as well. This is another buy. Not sure why I bought here. This is not a very beautiful area. There's this little area here. Price went up, but we came down immediately. So there's no demand in here, but the overall trend and the flows are moving higher, which is why this trade likely worked out. So more luck than anything else in there. Have a look at this one here. We bought here. This is a small one. This is a 1 hour trade. So if we look here, we can see, move that on there again, here it is. So the robot wanted to buy here. We had a tiny trade, went up there, so it's like a 1-to-1. There's probably some micro stuff in there somewhere, so we can find it. It doesn't matter, we don't need to find it. You can just see here that the robot bought here. We had enough of a bounce to hit the profit, and then price went down to it. Okay, but essentially here, this is very much messing around in the middle. You can just see how price is doing this. This is often what you see in the middle. This is what you see at the extremes, and this is what you see at the extremes here, and this down here. Okay, this stuff in the middle, price is going up and down efficiently. There's no imbalances there. That's efficient price, that's efficient trading, and so you don't want to get involved in the market in the middle there. Okay, let's have a look at this one here. This was a sell here, which is alright. This is a 4 hour trade. You can see the area here. In fact, it took it here. The stop was up here, and we got a 1-to-1 on that. 1-to-1, about a 1-to-1. Okay, interesting area. Not terribly extreme. This is a nice area up here, but it did do that. Let's have a look on the weekly chart and see what's going on there. Well, notice here on the weekly chart that we're actually reacting at some bodies here. You can see rejection up here, rejection, price went up there, and the robot thought it'd be a good idea to sell, which it did, and then price wriggled lower. Now we're approaching this area of opposing demand. Okay, so very interesting there, I think. We have another loser, and this is buying in the face of, what do we have here? It's difficult to see. Let's go to the daily. There's a 4 hour trade. Where are we? So we have this area of supply. Okay, and the robot wanted to buy this little price nodule here, this one just here. Okay, tested it, then price just cut through, hit the stop, and then we moved on from there. So that was just a very quick one. Again, really bad idea. Why? Because we're reacting at this here. Okay, and you can see also the price has already been back to this area here and here, which brings this into focus, and this essentially, and there's actually not a lot to do here for a while, until we get up at around just up here. Okay, so but you can see that there's a lot of there's a lot going on there, lots and lots of trades that were taken. You can see we have a lot of 4-hour trades, a lot of daily trades, and if we organize these after, I should make it so that I can sort these better, but I find that the higher the time frame, the higher the probability that the trade will work. Okay, so if we look at, if we just put this back on like this, and then we add, okay, I mean, you can just see very clearly that this is just a pretty interesting area. Why? Well, again, it's at the high, so it's at the very, very high of this weekly high. We have our stop, which is higher than the high of the area. You can see this box is bigger than this box. It's probably 1.5 times the size of this. So you could just click this on, and the robot will open the trade here. And I feel more comfortable doing this because we have the meta order flows that are okay. And so here you can see that we have a higher probability trade. Why? Because price has turned here. When you look at a price chart like this, okay, if you look at this, I mean, we have these major turning points in price. Okay, price went up and it went down, so it left this area. What does that mean? Well, that means there's enormous interest in selling American dollars and buying Japanese yen from this price point here. If you look left, you can see that we do have supply here. Okay, but so you really want to position yourself short at a point like this. Okay, the same thing happens here. How we have this this high, price moves up, down, up, and then we can see we have a gap. Price gaps lower, and now it's returning to the origin. And so this is the really, this is a very clear indication that price is probably going to have a bit of a bounce at this price level here. Okay, so you just have to be very very mindful of this. Okay, let's take let's grab something else and have a look. First, we want to be on the big time frames. We want to see what's going on. And if you see here, you can see, actually let me turn on this, and it updates the chart over here. You can see that we have this one down here. Price came up, we moved sideways for 2 months, and then we just moved away, and we managed to move below these lows. So there's serious selling at this level here. This is an amazing trading opportunity here because of that. Okay, so now price has formed a lower low, and now it's coming back to potentially the same area here. So maybe we can have a look, maybe take that trade again. It's at 1.2, we'll go like that. Okay, and maybe we'll try and get involved in the trade at that area once again here. Okay, so we'll click that on and let it do that, and we'll just put this here at a 1-to-1 for the time being until we see what forms. You can see there's something here, maybe weekly demand forming below price. So we want to be careful here. Okay, and also notice that we're trading in line with the interest rate swaps between these two currencies. So we'll be being paid £7 per standard lot per day. So that's that can be a lot of money if you're trading a bigger volume. Okay, so let's have a look at the American dollar, Swiss franc. I mean, what's going on here? What do you want to be doing here? Well, notice that we have, let me use this tool here. We have prices being rejected from these levels here, and then we have price being rejected from these levels here. So for the time being, there's not a lot to do. Okay, so the better thing to do would be to wait until price move back to the extremes. You can see we do have some demand here, which has been tested once, so we can expect price to maybe have a bounce here once it returns. Okay, but isn't it nice to know that, okay, for the time being, there's nothing really to do, and so you can take this information with you when you go to the smaller time frames and you want to look for a bias. And on the weekly chart, we're seeing a slightly different picture. We're seeing a price imbalance at this level here. Also notice on the weekly chart, we're pretty high up. So if we mark off this whole box here, from here to here. Notice that if this is the middle, we're kind of at the middle here, so we're in the upper half, so we're actually in the sell half of this box here. So you want to be positioning yourself short in the upper half here and long in the bottom half here. This is really important. Okay, you go to the weekly chart. This short position happened at the top, in the top half of the box. Okay, and the long positions were probably going to happen towards the low end of the box. And you can see the price has already been back down to this area, so we have an area of demand from here. It's been tested once, so this might be an interesting area for us to buy at once price comes down. Also notice the price came down here, rejected, 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 so the beginning of the buy zone is down here. So this could be an interesting area for us to buy at in the future. Okay, good. Okay, let's do a couple more examples. Let's do the Aussie American dollar. First of all, we're going to start on the monthly chart. What's going on here? Well, we're very low. We've moved. If we look at this little price structure here, from here to here, and price is currently here, I mean we're very low. And if you watch the video from last week, we have, goes from a high to the low. Okay, so price went from here, it went up here. A second ago we spoke about the buy and the sell zone. The buy zone is below here, and the sell zone is up here. And then we can, here to here, sorry, the silly thing disappeared on me, color green, and the buy side is here. Okay, so here we are looking to sell at supply on this side of the chart and buy at demand on this side of the chart. Okay, we have some demand kind of down here, so this is a good area to buy, and this is a good area to sell. This is high probability here to sell, high probability to buy. This is also high but slightly lower, okay, to sell, and this is slightly lower probability to buy here. Okay, and so you want to look for supply in this side of the box to sell. We have this here, and we have this here, two lovely areas, and then there's nothing in here, there's nothing to do here. So my expectation is the price will maybe feed a little bit lower and then move up to these areas here and here. Okay, this is what I'm expecting at least, and you can see that pretty clear if you look at the price chart, how price has gotten close to these lows here. This is, again, we have a very sharp push lower and a huge push higher. I mean, this is a very important price point for us. So when price gets close to this, you want to look for reasons to buy. And reason number one is we've gotten back down to the very origin of this move higher. Okay, and you can see that there's no real supply in here, and so if price manages to come back down here, we should see some strong pushes up into the opposing side of this box here. Okay, this is really powerful stuff. Okay, go to the weekly chart, you kind of do the same thing. You can see that we have price reacting off this. Okay, we have opposing supply here. There's not a lot to do except for buy. So we do have a bullish bias for the time being. Okay, but that stops when we get here. When we get here, then we want to be out of our positions because this is a very strong push low. We had 2-3 weeks of selling. Then we found the lows, we saw some rejections, you can see here. So you just want to make sure that when price comes up here, then you're no longer in your positions, or you have no risk at least. Okay, so now we just want to look for long positions. On the daily, you can see those here. You can see that we've got one just here. So the robot will probably find that for us. See here, we want to do 2 times the multiples. We'll just turn that on, and the robot maybe open that up for us. There we are. Okay, it's the expectation that we're going to move up to here-ish. Okay, so pretty interesting stuff there, I think. Okay, remove this and this, and we'll do one more example, then we'll pack up for the day. Let's have a look at the American dollar, Canadian dollar. Where are we? Let's go to the monthly chart. Where are we? Ooh, we're pretty high, aren't we? We're very high. We're reacting at this monthly supply. What does that mean? Well, that means that we want to be selling. This is very clear. You can see this is a very strong push lower. Okay, so we have reasons to sell. The reason being that we're reacting at major bearish order blocks here. Okay, price poked into it, we had big rejection, we had another go, big rejection, and now we're sitting down. We're probably waiting to pop lower. So you want to go to the smaller time frames and look for those areas of supply that you can sell at. And you can see we have a couple of them lining up. We have this one's a little bit too close to price. If you focus on what we spoke about earlier, okay, and if you look at this whole thing here, this is pretty sideways, isn't it? Price going like this, like this. And so essentially I want to be selling up here somewhere. This is a nice area here. We do have this area here as well, which is also okay. But there's nothing really to do in here. So you want to wait until price comes up to here to about the one, can't even see what that says, about the 13400 area. I think that'd be a pretty interesting area which to sell. But we got our short bias from this time frame. Okay, so really clear indication that we want to expect price to move lower. And there's no real demand until we start getting to the buy zones, which are we got something here, we got something here, 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 and then ultimately down here we got some demand just down here. Okay, so nice area to start to accumulate orders to move price lower. If price does manage to move higher, we have this beautiful area up here to sell at. That's very far away. We do have this one here which we reacted at a long time ago, and we had massive rejection, as you can see. So yeah, we can expect price, I think, to wriggle lower from here based on the reasons that we covered. So I'm going to wrap it up with that. Thanks for watching. If you have any questions, please add them to the video or post them in the forum. Thank you.